Okay, we wanted to welcome everybody. Thank you guys so much for being here. So just to kick it off, we are so excited to announce the first half of 2021's financials. This is something that we do regularly for all of our shareholders and any prospective investors. Howard is going to go through and discuss the highlights from our financials, and then we're going to open it up for a Q&A from the audience. So if you have a question, you can ask it in the chat. We're going to be answering as many of those questions as possible throughout this. And I also wanted to especially thank all of our StartEngine owners and shareholders. So if you don't know already, we have a current funding round live for StartEngine. You can go to startengine.com/own and you can invest or ask any questions. And we have over 20,000 shareholders already part of our StartEngine community. And in just, I think it's been 4 weeks and we've already raised over $8.4 million. So it's been really an amazing start, and we're just getting started for a $55 million round. Without further ado, I would like to welcome Howard. Howard.
Hey, Joanna.
And Howard is going to kick it off and go through the financials. And it just, again, as a reminder, you can enter into the chat or the Q&A if you have any questions, and we'll be answering those throughout the event.
Very good, Joanna. Thank you so much. Oh, we got a disclaimer. Why don't you go back just to offer everybody the disclaimer. It basically tells you that we're not going to give you any forward-looking statements, but to the extent that our discussions are related to financials and information, we have plenty of good legal language here. Okay, so here's what we're going to do today. We're going to go through our agenda. I'm going to review our company's mission, core target values. I always do that. I think it's important for all of us to share what StartEngine is all about, our culture, and what we're trying to do in terms of our mission. And then after that, we're going to review our 2021 first 6 months financials. We're going to discuss some of the trends that we're seeing, and most importantly, I'll answer your questions. And I know this is really a great format for that. And please come in with all your questions you have. One thing we won't be able to answer is any projections. So if you say, hey, Howard, okay, look, what does it look like the next 6 months? I'm not able to answer. First of all, we don't have a crystal ball. And secondly, it's just something we don't do. We don't comment on anything that is forward-looking. On the other hand, we're happy to talk about product, talk about R&D, customers, things we see in the market in general. We're more than happy to discuss that. So let's get started. Mission: help entrepreneurs to achieve their dreams. Our core target by 2029 is to help entrepreneurs raise $10 billion for their companies. So here are the values for StartEngine, and keep in mind, this means that everyone at our company, we have almost 90 people, have to live those missions most of the time. Those values. So own the mission, which is to help entrepreneurs achieve their dream. They have to live that, exceed expectations, be a team player, stay curious, do the right thing, and care about others. Now, one thing I would like to point out with do the right thing is this is probably the most important value at our company. And the reason I bring it up is simple. In the world of finance, as you probably have seen when you read the Wall Street Journal or you look at some of the news, there are a lot of issues with companies who may not necessarily follow the rules as they've been created. And doing the right thing is a superpower. Having that and requiring that everyone at StartEngine live this will allow our company to prosper over a long period of time and not take big step backs because of regulatory huge issues. I mean, yes, we'll always have regulatory issues because that's the nature of the game, but doing the right thing is probably the most important. And we hope that the whole financial industry follows this lead and decides to do the same thing and hold everybody at the company accountable. So if we see someone who have even an inkling of not doing the right thing when it's to with our investors, our customers, that person will not stay at the company. I'm just telling you guys, it's so important to us. All the other values are very important, but this one is our superpower. All right, let's get started here. So this is pretty cool. In the first 6 months of 2021, we generated more revenue than the entire year of 2020. Now, I know that it's easy to say that, but very hard to do. The growth rate has been really amazing to watch. Our company, as most companies in the United States, went through the difficult years of the pandemic, and we were able to actually thrive in that period of time. And so it's great to see that the first 6 months of 2021 just started really, really well. So in terms of more details, you can see our revenue increased 146%. So we went from 5.4 million to 13.4. That's very cool. Now, keep in mind, these numbers are unaudited, and it's very possible when the auditors come in, they will want to reclassify some of the revenue. That's normal. But these are the numbers we have right now. So in terms of our loss, so last year we lost about $400,000 during that period, and we have a net income of 2 million. Now, one thing to understand is we've been profitable for the last 6 months, but it doesn't mean we'll be profitable in the next 6 months. I just want everyone to understand that our goal is not to be a super profitable firm right now, but our goal is to be growing, getting market share, growing the market in general. And of course, if profitability can come along with it, that would be great. We do have a lot of ambition when it comes to marketing our brand and building our brand. So yes, it's great to see this profit. It may not happen for the rest of the year. We don't know yet, but again, keep that in mind. Gross margins. Now, this is an important metric because you want to know when we receive fees, how much of it do we keep? And so we made some improvement there. We went from 71.9% to 83.7%. That's a big improvement to margins in general. Having 83% gross margins is an amazing business. I mean, keep in mind that other businesses in the world of, for example, in the world of food, they have very low margins. And here we are in a fintech company with 83% margins. So I'm really proud that we were able to make improvements there. It doesn't mean that we can keep improving it. Keep that in mind, because there's a point where you run out of room to make improvements. But I think having it around 80% is actually excellent. And then you saw the cost of revenue, of course, increased because obviously we grew the company. Operating expenses also increased, almost more than doubled, actually. What exactly is it? It's very simple. People. We went from, I think we were about 24 people. Well, actually 2020 on the average, I think we ended 2020 was about almost 75, 80 people. So we had quite a lot of growth in people in 2020, but obviously it didn't impact it as much as 2021. So for the first 6 months of 2021, we probably averaged over 80 people. It's great to watch. Now, why do we need all these people? Well, we need to be able to take companies, help launch them on our platform. That takes people. We have an engineering group that has doubled in size, by the way, more than doubled. A great group of people. We also have marketing, and we have our review department, which does all of the legal work. That is an amazing group that goes through every single document, due diligence, verification, review. And so when you add everything up, it makes sense that we've doubled it. We've doubled our revenue, we've doubled our costs. Liquidity, capital resources. So that's pretty cool. We're able to get more cash contributions from the business in 2021. But most importantly is we are very strong in terms of our assets, cash, almost $22 million. And we have other assets. We hold a bunch of security stocks that we get from our customers when we raise capital and all sorts of other things, account receivables. But the fact that we're very strong in cash, I think it's important for all of you to know that we're able to sustain any kind of dip if there was one. So far, there hasn't been. And also the cash can be used for a bunch of things that we're doing this year that I'll cover a little later. So what are the trends for us for StartEngine? So first, we launched our first assets. We launched a REIT. It's been a little quiet because we're working on acquiring our first real estate property for that. But we also launched a wine, and that was very, very well received by our investors. It sold out very quickly. We have a lot more coming soon, and we're excited that this is something that our investors are interested in. It's a different asset class than startups, obviously. It's more stable. It has proven past performance. It's an exciting class. We're going to be launching other things than wine. I'm happy to announce that we will be launching memorabilia in music and sports, art, all sorts of things that I believe are exciting assets that until today were really reserved for the very wealthy who would have access to these assets. And now we're going to be able to make it available to everyone. And so someone wants to invest $500 in wine and hold it for a couple of years, great, and get a return on it, great. Or they can invest $500 in wine, and within a month or two, once it's available on our secondary marketplace, they can trade. So they could say, hey, look, I was able to hold it for 6 months, and now I have a return, and then I'll redeploy this money to something else. That's great. So we're setting up this ecosystem for our investors to be able to have access to a new asset class of collectibles that some people say are inflation proof. Some people say are in some cases more stable than the stock market in itself. Anyway, all of this is exciting, and you'll hear a lot from us on this. In terms of our growth, our team, as I mentioned, we hired 61 people since the beginning of the year. So that's quite a lot of people at our company. And it's great to see this growth. Growing a company is hard. Hiring people is hard. It's a very competitive market today. One of the things we've done that makes us competitive is we are a virtual company. So what does that mean? That means that we can hire people from anywhere in the country, and they can work from their home office. The benefit is simple: access to more talent. If I said, look, we can only hire people who live in Los Angeles, being the second largest city in the country, that's still a very big pool of people to hire from. But it's only, not even 5% of the country. I mean, it's 3% or something like that. And now we have the rest of the 97% available to us. And that's really great. We get to talk to a lot of people from all over the country who are interested in joining a fintech company. And when they hear about StartEngine being a virtual company where we are able to hire them and be part of our team, it's amazing. It's amazing to even talk to them about this idea. I think the pandemic in many ways has accelerated the future. And one of the accelerations has been this idea that companies can work remotely when necessary. and also do it as part of its culture. One of the things we're going to do is have a meeting 4 times a year where everybody gets together. Everybody gets together 4 times a year, so we can build camaraderie, we can build team, we can do all sorts of things. And then everybody comes back. They go back to their place of work. So far, it has been very successful, as you can see in the numbers. You can see in the growth rate. Now, we know that a lot of companies who are pretty sizable in the fintech world have done similar things, not necessarily remove their headquarters, but have decided they don't have a headquarter anymore where people can work from wherever they want. They will hire people from any place. So a lot of companies in our marketplace are moving towards that model. And we're proud to say that we've done that as well. The other thing is we launched our app very quietly about a couple months ago. Very quietly. Why? Because we're testing it. So a lot of you who are listening today have probably tried it. And we're relaunching a new version mid-October. And that is going to be a version that I believe we'll be able to market, we'll be able to grow. And we believe eventually most of our investments will happen through the app. And that includes the trading. Now, why is that? We've noticed that the convenience of an app is very well received and easy to use. And so we're very excited to make sure that we have this available to all of you. We also will have the web, and the web will be upgraded as well constantly as we do. So everything we're going to do is towards having both the app and the web, and a big emphasis on the app because we think obviously a lot of the growth will happen there. And as Joanna mentioned, we have our own that is currently live. We're going to paste into the chat a link to it so that you can have a link to the offering. And why we're doing this? Well, you've seen us several times offer shares in our company to investors, to existing investors, to new investors. And we're very excited to have our latest raise. As Joanna mentioned, it's a $55 million raise. It started with a big bang. We're over $8 million so far. It's growing very nicely. And we're excited to see the response, the excitement of our investors. There are a lot of great comments on our page. I welcome you to see them. People talk in the word we. Those investors say we. They feel part of our team, which is great. I love seeing that. I love seeing the fact that investors want to be part of our mission. They are part of our journey. They want to be with us. So this saying, hey, we are doing great. We're so excited. You should see those comments. It's really fun. Okay. So again, in conclusion, thank you for everyone in terms of your participation, being part of this really amazing community we're building. What I'm going to do now is take questions. So what you have to do is there's a Q&A button. You can click on it. There's some chats. I'll start with the Q&A. That's the easiest one. And then what we're going to do after that is continue until the end of this program. So one person is asking us, can you explain how an investor gets paid? Absolutely. So an investor in StartEngine, for example, after our raise is completed, we will bring back the StartEngine secondary and shares will be traded. So one option for an investor is to trade out of those shares after we've completed our offering. Another one, which is more traditional, is to hold them and wait till either the company goes on the public market or gets sold. That's another way to generate a profit potentially on the shares. Dale is asking a question, is there a plan, a StartEngine IPO in the future? I love this question because in many ways, we are doing an IPO, initial public offering right now, but we're not listing our shares on the NASDAQ or the New York Stock Exchange. However, it is possible we do it, but we don't have a plan right now to do it. Why? I think you would all agree with me, we need to grow the company to a certain size that would be acceptable to the markets. Why? If you look at this public market today, it's only for very, very large companies. I mean, you've seen Airbnb go public and Uber go public, and all these businesses are, Robinhood is a good example. And they had hundreds of millions in revenue, hundreds of millions, not tens of millions. So there's a little bit of a time for us to get there, and in due course. Kevin asked, bearing in mind the number of crowdfunding platforms that exist, do you anticipate consolidation in the industry as is StartEngine considering acquisitions? Well, I think yes. I think absolutely. I think there will be some consolidation, even though we're still very early in our cycle. Keep in mind that equity crowdfunding is only in existence for 6 years. And in the first few years, it was just tiny. It was like walking through a desert. And we did. And now it's growing and it seems obvious. Oh, of course, equity crowdfunding is great, but it was not true at the beginning. So we think there will be some consolidation, and the acquisitions that we would be interested in would be things that interest our investors, other asset classes, other types of investment opportunities. We would love to be able to consider acquisitions in there. We haven't made any acquisitions. We have the cash, we have stock as a currency, so we could do it. So it's something that we're definitely going to be looking at. David asks, can the StartEngine secondary platform allow trading of shares from all companies not currently raising funds? It would allow for liquidity for current shareholders interested in selling, but I'm not sure if the companies have to agree to the listing. Well, that is a great question. We've been pondering about this one for a long time. Now, in our case, we believe because we sell shares to consumers, consumers are able to invest in companies and buy and sell shares in companies. Because of that, the companies need to list in one of the publications like Mergen their financials twice a year. And because of that, we really require that the company participate. So we can't just take shares in a company that, unbeknown to them, will be trading. Now, other companies do that. One of them that comes to mind is Forge. They do that. And they do it without the company's approval. And they can because they sell only to accredited investors. And they also have restrictions on the transfer of those shares. So even though they say they have a trading platform, which they do, once a trade is made, then it's a little bit like buying a house. I don't know if you've had the experience. You open escrow, then you have to deposit, sign all sorts of paperwork, then you have to wait, then lawyers involved, or sometimes a broker, the escrow company, whatever. This is basically what happens. It takes them weeks to make a trade. Ours are instant. Our trades instantly clear. So unfortunately, that means that we'll need the company's collaboration, and we're getting it. We've launched 4. We have hundreds of companies who've signed, and we're just going to have to go through that process. I would love the day where we could onboard a huge number of companies who didn't raise capital on StartEngine. And that one day may be possible, because I think the regulators are going to look at this as a very positive thing. So we'll see what happens. Martin asks, how did you get a $600 million valuation? Great question. So if you look at fintech and you look at, for example, Robinhood, and you look at other companies in that same space, you'll see that they have a multiple of revenue that is pretty significant. Some of them are at 100 times multiple. So a good example is Forge is doing a SPAC at a valuation of 2 million, and they have what am I talking? 2 million, 2 billion. I'm in a different time zone here. $2 billion. And how? Well, they said that this year they're going to do 40 million. Well, we did 13 and a half in the first 6 months. I don't know what we're going to do this year, but it's certainly going to be, a lot more than 13 and a half, right? So hold on a second. So they have 40 million this year, and they're getting a 2 billion. So let's say for all intents purposes, they have 30% more revenue than we have, okay? And they get a 2 billion, and we have a 600 million. We're undervalued, completely undervalued. And then you can do the same math with Robinhood in terms of their revenue and their market cap. And you just do a multiple of revenue. Now, you could also look at profits. We have profits. Forge doesn't. They've lost a huge amount of money, huge. And I don't know if their model is even profitable. And you should study it. Robinhood, I mean, you guys know how much they've lost, hundreds and hundreds of millions. And then they start making money at the end, which is great to watch. But so I think the way to look at it is as a comparable in the fintech market, look at other companies, take a multiple of their, so in ours, if let's say, I'm doing an if, let's say we do 25 million, and you did a 25 multiple or even 22 multiple, you would get there. And I mean, it's a way to look at it. I'm not sure that this is true science, and it never is. But hey, that's what we looked at, and that's what it determined. We think, I'll tell you frankly, we think that if we did a SPAC, which we have no plans to do, but if we did, we would get also a big monster number. A lot of the SPACs use projections, we don't, and they come up with really aggressive projections. But anyway, that's for them to worry about, not for me. Herman asked a question: does StartEngine invest in companies that list on its platform? No, we don't make investments because it would be a conflict of interest. Why? Because unless we invested in every single company that was on our platform, you would say, well, hold on a second, I'm only going to invest in the ones that StartEngine invests. There's a complete conflict. And one of my goals with StartEngine is to remove all these conflicts, because I don't think the financial industry lives well with conflicts. I think you see them constantly, you read about them in the papers, but I don't know. The answer is no. Now, we do own shares. We earn those shares. That's different. And another attendee is asking, what are the upcoming alternative collectibles that are being considered? I did mention a few names there. I did mention, we talked about the wine. We talked about memorabilia. Most of them are one of a kind. We talked about, we didn't mention comic books, trading cards, watches. We didn't talk about these, but these are all on the list. There's a list of assets. So we've hired a new person who's joining our team as the vice president of assets, who starts actually this Thursday. And this person's goal is to do all of that, is to figure out, okay, in the world of collectibles, in that large world, trillions of dollars of whatever, if you add real estate and all the different asset classes, which ones should we make available to our investors? And so that is where we're going to be working on. So just stay tuned. You'll see a lot of things. Can StartEngine now accept, Jose asked, can StartEngine now accept investments from Florida residents? The answer is yes. So for Florida, we are able to accept investments in our own campaign. That's now done. And we go through a broker dealer called Dalmore, who works with us. And also for the other companies on our platform, we do accept it from Florida. So that's no longer an issue. Brian asks, the StartEngine REIT is a separate company from StartEngine? Question. Yes, the REIT and the collectibles fund are separate entities. And guess what? They're owned by the investors. They're not owned by us. We are the manager, and you entrust us to manage those funds. That's basically what it is. The other question is, has the REIT actually purchased residential or commercial property? If not, what's the expected timeline? So the answer is we haven't yet, and we are now reviewing opportunities to purchase the first asset. What we'll probably do is identify an asset, purchase it with our own money, probably through a loan program, and then offer it to the investors. That's probably a better way to do than what we've done so far, which is to open the REIT without any identified asset and just say, okay, guys, invest, and then we'll use your money to purchase an asset. And the response we've got so far has been, hey, Howard, this is great, but we want to wait till there's an asset. So we're going to be doing that. All right, Palavali asks, do the StartEngine website and app development done in-house or outsourced? It's all in-house. And I'm proud of that because I think it's important that we have our own team. They're committed to the company. They understand what we're doing. They live our values. Most importantly, they live our values. I think that is pretty much the reason why you want it internally. Karthik adds, are there plans to bring crypto, NFT, DeFi to StartEngine? Wow. Well, if you guys, you know what would be cool? If you guys, our team can post in the chat the two articles I wrote on this, on NFTs. They amuse me to no end because I believe NFTs are a security. I believe DeFi, which is decentralized finance, are securities. A lot of them are asset-backed loans. A lot of them are, derivatives. Anyway, I believe these are securities. Now, the market out there doesn't believe that. They believe that these are commodities. Okay, well, you know what? That's a good debate, right? I don't know. Last time I got involved with this, it was during the initial coin offering phase, ICOs, and they all ended up being securities. And there was enforcement against all these people, and it was not pretty. So do we have plans? At this moment, no, but there's a big but. We're working on with the regulators, and that is the most important part, with the regulators in figuring out how to do this. Why? Because it needs to be done. But you have to figure out how to do it with the regulators, not outside of regulation. Because frankly, doing it outside of regulation only yields to trouble. Because the regulators, the way they regulate, at SEC is through enforcement. Not pretty, not good. The company, you can lose the company. You could also, in many cases, be barred from running a public company. I mean, it's just awful stuff. Anyway, why lose your reputation for what? For more money? Nah, we don't need to do this. So yes, with regulators, you will hear a lot of this in the future, where StartEngine is an innovator with regulators. Jesse asks, who are the biggest competitors? And what's a durable competitive advantage? So the biggest competitors so far we have, and they're great companies, by the way. Seed Invest, WeFunder, Republic. Those are the three large ones, I would say. And they're great companies, by the way. Great companies. Now, our competitive advantage, and we have more revenue than they do, but not all of them are publicly talking about the revenue. WeFunder is, because they did a Reg CF, so we can see their revenue on a yearly basis. But Republic hasn't, and they're financed by venture capitalists. But we do know it's very easy. You just see how much they're raising on the page. And then I mean, it's not that complicated, and you can see what kind of fees they earn. So, but our biggest competitive advantage, I would say there's two of them. One our values. I truly believe that the values are the biggest competitive advantage. And you could argue with me that I'm wrong. No, Howard, because, hey, that's not a strategy. Values are not a strategy. But I would tell you this, we're still a people-based business, by the way. People matter, values matter. And if you have an amazing team that has the right values and live the right values, there are no limits to what you can do. And when you have someone in an organization that doesn't follow values, like do the right thing, and you're in an organization where people are doing politics and fighting, I don't know. Doesn't seem like it's going to go far. And I believe we have the right values. I don't know about our competitors. Then the other thing is, we built secondary. We're the first to have a trading platform. We think that's a tremendous competitive advantage. And the fact we're the only ones doing really, I think Republic does some real estate, but we're the only ones who are really openly saying, look, we're going to do also the collectibles. We've also have proven that we can do volume, which some of them haven't not done as much volume. But by and large, we believe the market is going to grow really well and there's room for everybody. So we're not spending all our time trying to worry what our competitors are doing. We're spending our time trying to say, what do investors want? What do CEOs of companies need? And how do we meet those needs? And we believe that if we do that, we'll be very, very successful. Another question from Peter, wine sales. Any net income for this venture? Nope, not yet. But again, everything will be disclosed. All the information will be there and will be filed, but not at the moment. Mark asked, what is the focus on international expansion? Great question. Some of you may know that I'm a triple national of British and French and grew up in France. Born here, grew up in France. I've lived in Europe. I know how it works. They're now announcing they already announced in November the passport program, which is kind of like the Jobs Act, but not as good, in my opinion. And WeFunder has announced that they're going to be opening an office in Europe. And I'm going to tell you this. I am not ready for this. I know, look, I've been in business for a long time. I understand. Look, one of my companies had international offices. But I don't think we're ready. We haven't scratched the surface of the United States. We have about, 500,000 users on StartEngine. I want 5 million. But 5 million is still nothing. I mean, think about it. Out of 350 million people, I would say easily, potentially 150 million can invest. Look at Robinhood. They have 30 million accounts. Look at E-Trade. I mean, we need to get to somewhere in that range, but going international now creates a lot of distraction. And I don't know if there's really that much profit to be made initially. So maybe what we'll do is we'll watch. We'll see what happens. And then the one thing is, I did some homework, by the way, on this. The trading is not really established. Where here it is. We've proven it. Not in Europe. So until trading is figured out, I just don't think it's appropriate to ask investors to make all these big investments without trading. Okay. Caleb asked, what plans and ideas do you have to improve secondary? I am telling you this. First of all, this is one of my big projects. We plan to improve the experience. First of all, we don't think it's the right experience right now. We think it's a little clunky. It works, which is great, but we just don't think it has the right feel, ease of use, and it can be improved, and we will improve it. But most importantly, I look at the NFT market, and I see that people are trading billions of dollars of things that anybody can argue are worth something or not. I don't know. You can argue, I can argue, a rock, picture of a rock or a CryptoPunk. Is that worth $2 million? I don't know. investors say it is worth. But because they don't have regulation, you don't know if people are doing insider trading. You don't know if people are doing wash trading where they trade between themselves. No one knows this. In fact, OpenSea is one of the trading platforms. They just found that some people at our company were doing that. And they're like, oh, we're so sorry, but they're not supervised. We have FINRA and the SEC come and visit us regularly, which is great. You want that as an investor. You want the regulators to look at everything a company is doing. This is how the financial system is trusted. I don't know, but anyway, when I look at that, I'm saying, hold on a second, there's a huge opportunity. People want to trade. And they're trading billions of dollars of NFTs. So why not billions of dollars of companies? Why not? So that's really something we're going to work on. Any progress on secondary available for California residents? That's a project we have. So California, for those who may not know, are not a part of the program where we're able to initially trade the day we launch them. We have to file with California, and then once the filing has been accepted, we can trade. It takes 3 to 6 weeks, maybe more than 3 weeks, probably 4 to 6 weeks. So, okay. We're talking to the department there, and I don't know if they like talking to us, but I love talking to them. I'm not doing the talking. Someone on my team is doing it. Why? Because we believe they should be part of the program to allow people in California to trade. They should allow it. You guys want it. I know you want it. We've seen it, and we're telling them, look, investors want to trade, so please make it easier instead of making it hard. Some people said, oh, the reason they're making it hard because they want the fees, because they get extra fees. I don't know if that's true. I think they are working at the service of the people of California. And because of that, they will do the right thing. And we will work with them on that. April asks, I know this is about investing in StartEngine directly, but could you speak to how Prime Bank is managed by StartEngine in support of the portfolio companies you support, and how it helps investors with managing income that hopefully they will be receiving? Yes, that's true. So Prime Trust is a bank, and we work with them very closely. And when you open an account, it's with Prime Trust. And as a bank, they're highly regulated, which is great. We love that. And to the extent that shares are being sold, and then to the extent shares are being sold, cash will be delivered into the accounts. And this is like a checking account. It's FDIC insured, which is great. And that's it. I mean, it's working well. To the extent that you have comments, suggestions, ideas, please let us know. Brian asks, has any of the StartEngine companies been acquired privately or have listed public NASDAQ, New York Stock Exchange? So the answer is yes. We've had several of them that were acquired for cash or sometimes for stock, and the shareholders have been notified. And then recently, you probably saw that Knightscope announced publicly that they are going to be listing on NASDAQ. And we have a lot of people on the StartEngine platform who invested in Knightscope. So it's something you should be looking forward to. I don't know the timing of any of that, but you can see their announcement. Probably it's on their page on the website at Knightscope. Kevin asks, for the STE StartEngine owners bonus, does StartEngine pay participating startups for those extra shares? Okay, the answer is no. Those shares are offered by the startups themselves to participate in the owners bonus program. Rikesh asks, I've been asking the team for swag. Can I get some? I want to wear my Pride for StartEngine. Wow, we're starting to look like rock stars. What a suggestion. I think we should do that. I think we should. We do have some shirts that we give as swag for internally. One of them was beautifully designed by our vice president of funding, and then we have other ones that are also nicely designed. So anyway, I'll talk to marketing about it. It's an interesting idea. to add this in the store somehow. Paolo says, do you see your competition as crowdfunding platforms or venture capital firms? I think they're different, Paolo, because I think venture capital is very important. They have a very important role. They are deploying a tremendous amount of capital. The terms are pretty harsh for the founders, very harsh. The law of restrictions and loss of control. I don't know. I think these are different. I think crowdfunding is much more expansive. I mean, a good example is women-led companies. A good example are minority-led companies. On StartEngine, they represent a significant percentage. Significant. In the venture capital world, they don't. I don't know why. Well, I guess I know why, but I'm not going to talk about it. And so I think they're different. I think we are expansive. What does that mean? Expansive. I think equity crowdfunding will grow access to capital, not replace what already exists. So like if your question is like, okay, Howard, when are you going to get rid of all the venture capital firms? The answer is we won't. They have their role and we have our role. And our role is to expand access to the consumer and expand access to companies that I think in many ways were either overlooked or not part of the plan for the VCs. So that's the best way to explain it. Okay, I'll take some more questions. We're almost out of time. We have about 10 more minutes. But anyway, Tyler asks, what happened to my investment for last year, 2020, since there is a new offering this year? Does it mean that my last year's shares have been diluted? The answer is yes. So you own shares in StartEngine, and right now we're doing a $55 million offering. The dilution you should expect, to the extent that we can complete the entire offering, is somewhere around, I don't know, 8%. I mean, you can calculate, yourself, but it's not a big dilution, just let you know. To the extent we complete it, to the extent, let's say we do half of the 55 million, then it's half of that. So it's about 4%. Again, those are not absolute numbers. You need to calculate it. I'm just giving you examples here so that you get a sense of what's going on. Greg asks, will we eventually transition to live SC secondary quotes? Well, we already have that. We have live quotes. Maybe what you mean is 24/7. Right now, we open the market for a couple hours a day. Those are live quotes and real-time transactions. And very similar like NFT and tokens and crypto. Similar. They do instant, we do instant. Well, that should make you think about how we're going to move into the future, because if they do instant, we do instant, and we have instant quoting, they have instant quoting. The only difference between them and us is we do shares that are considered as securities, and they say, well, hold on a second, we're not doing securities. That's what they say. Read the article. Anonymous. Someone in the main chat asked if you would buy out a competitor like WeFunder. With StartEngine expertise, WeFunder would run better. Well, I don't know. I think that's a compliment. Thank you. Brian asks, any plans for bringing crypto, blockchain, NFT? Well, I already answered that question. StartEngine invests in companies, but how many shares do you earn? Okay, so typically we out of a raise, we get 2% of the raise in shares. So let's say we raise $1 million, 2% is 20,000. We get 20,000 in shares. So let's say it's $10 a share. Okay, that would be 2,000 shares. I mean, just showing you the math. Eric asks, thank you for doing this call. Incredible, excited shareholder here. Thank you. My question is, how do you attract the top tier startups to raise on your platform? I'm a startup founder and I have potential investors interest from VCs. Why should I choose StartEngine? Secondly, what would you say to public equity retail investors who are skeptical about equity crowdfunding? Okay, well, there are two separate questions here. Let's unpack that. You're an entrepreneur. You want to raise capital. Well, VCs are great, except that they're going to want a board seat. They're going to want preferred shares. They want a lot of things like tag along, drag along, anti-dilution. I can give you a whole menu, laundry list, because they're protecting their investment in their own words, not my words. Different. Equity crowdfunding gives you the freedom to raise directly from your fans, consumers, customers, investors who really are alongside with you, on the journey. They're not here to control and decide whether you stay at a company or you don't stay. They're here to be part of they're cheerleaders. That's the best way to say. They're cheerleaders. They're here to help, whatever you want. VCs in many ways have two roles: either put more money in the company or get rid of the founder. Why? Because if they put more money, that means they believe in it. And the minute they stop putting more money, they're sending a signal that it's over and you can't get any more money. And it's too binary for me. That's just too harsh. Too harsh. Typically VCs, 2 out of 10 of their investments do very well, but the rest don't. So if you're in that rest, you would not be too happy. With equity crowdfunding, you don't have to deal with it. You don't have to be in a position where you're done. You're not done. You can keep going. I don't know. As an entrepreneur, I'm speaking to you as an entrepreneur. I chose to finance StartEngine with our own crowd using Regulation A and Regulation crowdfunding. I believe this is the way of the future. We have the freedom to operate our company. There's no urgency to exit. We can build a significant company over a long period of time. I don't know. I like this better. For me, not everybody would agree, but that's okay. But at least you have that option. Think about this. You got an option now. Before it didn't exist. And then the second question is the skeptical investors. Well, you know what? I think as the market grows and we demonstrate more companies providing interesting returns to investors, I think more people will participate. And I think people invest not just only to see their money grow, but they also want to be part of a journey. Be the change you want to be, and so that you're going to be investing in that. All right, we're almost out of time. So Thomas asks, how can we expand StartEngine's footprint? How can we? I don't know if you guys realize the word "we" here. How can we expand? This is so amazing, the way, guys, how you're writing here, because you believe, and you should, we're all in it together. I think it's great. I love this. I love this. It makes our work so much more rewarding. I have a difficult time find it, and just saw the first TV commercial yesterday. Great job. Eager to see your new investments. Okay. How do we expand our footprint? That means how do we grow? Well, I think TV is great. And you'll see Joanna, who runs our marketing, we have some new commercials. I don't know if you guys saw it. Why don't you, if you guys can post a link to our commercials here, I think you guys should see it. It's Mr. Wonderful in a jetpack. Because we actually financed a jetpack company in the very early days. And I went to the demonstration of the jetpack. I went on the barge to watch the thing work. It was unbelievable. It was just incredible to watch. And so he's in a jetpack, and then he talks about why StartEngine, and I think you guys should check it out. So I think marketing would be great. So we got a poll going on. We got a poll. So if you guys can answer the poll, that would be great. I don't know why they did this thing. Would you be interested in live Q&A? It was hard every 2 weeks. No one talked to me about this. So if you guys say yes, I'm kind of stuck with this. Have you already invested in StartEngine? Let's see, 82% have said yes. Wow. That's pretty impressive. 83% yes. Wow. So we got a lot of owners here. Thank you for being owners. And I'm, pretty excited to be together in this journey. Okay, after this, we're gonna end this webinar on time. So the results you can see from the poll, I don't know if you see the results, but interested in a live Q&A, 67% say yes every 2 weeks. Have you invested in StartEngine? 82% say yes. Pretty cool. I want to thank everyone. Thank you, our team, for organizing this webinar. Thank you for taking your time. An hour is a long time, by the way, to listen to our presentation. And I look forward to continuing working together and continuing our mission to help entrepreneurs achieve their dreams. Thank you very much.